G'day folks, welcome back to another update for natural gas. Now the downturn is continuing on the natural gas pricing, especially on the daily. The weekly is also breaking down. We'll go to the charts in a minute. But first off, also we are introducing a video series on a weekly basis for newbies or for those new to trading. So if you want to get an idea of how to set up your charts and start trading from scratch, hopefully this Pete's Investing Plus One series helps as well. So tune in for that. We'll try to put those out each weekend. Before you go any further, make sure you hit that like and subscribe button to support the channel. So for the outlook as of today, April 8th, BOIL, it's one of the ETFs, seeks to achieve twice the daily performance of the Bloomberg Natural Gas Subindex. KOLD is the inverse of that, for twice the inverse of the Bloomberg Natural Gas Subindex, and UNG designed to track the daily changes in the spot price of natural gas through near-month future contracts. In terms of AI data processing and geopolitical events, the rapid expansion of AI technologies significantly increasing electricity demand, with data centers projected to consume up to 900 terawatts by 2035, up from 185 in 2023. Natural gas is expected to supply 60% of this growth, potentially increasing power sector natural gas consumption by 10% by 2030. So we always look at the long-term trends first. So we've got the monthly, the weekly and the daily, and often the smaller time frames do have an influence in terms of where the larger time frames are heading. So it depends on what time frame you're trading. We always look at the higher time frame as well. So here at the monthly, you've got still a bullish momentum with the CCI starting to turn down, although it's still bullish on both the price and the CCI above the respective moving averages. On the weekly, the price is actually touching that moving average band at the moment, but notice the CCI has entered that moving average range, giving us a somewhat neutral positioning. So just cautiously, if you're trading on the weekly, cautiously, I wouldn't be going long until we started seeing some upside on the daily movement. On the daily chart, however, you can see there that both the price and the CCI have broken down, and it's been that way since around about the middle of March. And if we put up the indicators or the trend lines, you can see there it's now bouncing below this diagonal descending trend line, and it's actually broken below this previous support at 39.45, and the next level of support will be this 32.16 level. But today so far we've got a slight bullish movement, but notice the CCI is still bearish, so just cautiously going short only, no long positions. If you go to the intraday chart, you can see there, if I zoom out, it's actually broken descending trend line after it was in that channel initially, and it's now currently making some movement to the upside. There's no bullish divergence, so I would say more bearish movement to the downside is to continue. We might see a bit of a retrace towards this trend line, but nothing too dramatic. At the moment, the hourly is also broken into that moving average band. Now, in terms of trading and back testing, I've got the back test here, and the reason I've started it here on the stop loss and the average down approach, because that corresponds with this period when the price broke down below the CCI, and just also below that price moving average and the CCI moving average. So that's where the back test on the stop loss approach and the average down approach are started. Now you can do this on any time frame, and I typically do it on the 1 hour period. You can see there the 1 hour period on the stop loss approach has generated 5,545, and the average down approach so far has generated 24,480. Now, I'm not telling you to let it run throughout the whole period. What you would have ideally done, at the very latest, you would have closed it out when the CCI broke into the moving average on the daily, and that was on the 28th of March, and that corresponded with this period back here. Now, notice that you would have lost some profitability on that. So to avoid that, what you look for is any divergence, and here we had two separate bullish divergence. The first one was there between higher lows on that point versus lower lows there. So theoretically, you would have closed out, once you saw that bullish divergence, you would have closed out your position immediately after that, because potentially the price would have started to appreciate from there, and you would have taken your money off the table. So that would have been your first potential exit of the trade. The second exit would have been this second bullish divergence. So had you kept in the trade, that showed still a higher low on the CCI versus a lower low on the price. That also started to break up. You can see there that was about break even. So had you stayed in the trade, you would have been break even at that point on the average down approach, but the stop loss approach is still in the positive. And had you stayed in the trade, then you would have gone into a bit of a drawdown into a negative territory. So be very careful about the average down approach. That's why I always stress, always follow the bullish divergence to get out of short trades or bearish divergence to get out of long trades, if you notice that on the smaller time frame. So for BOIL, on the long-term trends on the monthly, first off, that's still very bearish, and it's bouncing down from that moving average range on the price. There's no CCI for it. On the weekly, we did have this bullish divergence, a very long play on that one. Started in 2023 versus lower lows on the price, and that actually finally bounced through that moving average range, and we would have waited for that to break new highs, which it did. But currently it's pulling back towards that moving average range as well on the weekly. But notice the CCI is still bullish. On the daily, it's been in this range now between these two diagonal descending trend lines, and it's finally resting on this second one here with the CCI still broken below on a downtrend, so bearish trades only. We might see a bounce from here possibly. So to determine that, we look at the smaller time frame, and that's where we go to the 1 hour chart, and you can see there we look for any divergence, and there's no divergence showing at the moment on the 1 hour time frame. But you can see there we've got a slight bullish candle so far. It's pulling back towards that descending trend line. But at the moment, only short trades to be taken. And again, if you're going short, using the strategy of breaking below the CCI and the price, you enter the trade and ideally close out the trade when the daily breaks into the moving average range, similar to the natural gas commodity price. So for KOLD on the long-term trends, on the monthly first off, you can see it's broken below the moving average band of the monthly price chart. There's no CCI currently drawn for it or completed. On the weekly, still very bearish, with the CCI just breaking into that moving average range. So if you're going short on the daily, you would probably close out your trades by now with that break into that moving average range based on the weekly. And also on the daily, you'll notice here we had a bullish divergence, and that was your first indication of getting out of any short trades on the daily if you were trading it based on the weekly trend. That, again, as I said earlier, always pay attention to these divergence, and you would have got out of the trade once you started noticing a lower low on the price and a higher low on the CCI. Now, since then, the CCI is still rising, and the price is also still rising, breaking above the moving average band. So slight bullish movement so far on KOLD. Looking at the micro level, the 1 hour chart, bullish movement only on the 1 hour chart if you're trading according to the daily. And you can see there we had a bit of a gap up in the last few hours previously to our last end of the week. And since then it's moved higher with the CCI still moving higher. No bearish divergence yet on the 1 hour chart. And that's where we are. So bullish movement on the KOLD at the moment if you're trading on the 1 hour. And for UNG on the long-term trends, first off, you can see there it's just broken above, very slightly above the moving average of the monthly price chart. And the CCI is broken above the moving averages. So somewhat slightly bullish to neutral positioning on the monthly. I'd like to see this moving average band on the monthly turned up like it did back here to be more confident of bullish move. On the weekly, we also had another bullish divergence back here, a very long-term one versus lower lows in the price, and that also broke higher. And the CCI is still rising, although notice the CCI is broken into that moving average range with the price also pulling back. So just be cautious about that. If you're trading on the daily, wait for that to break higher on the weekly. And on the daily, we hit this resistance up here with a bearish divergence. It broke down, and actually since then, around about the middle of March, it's been bearish, similar to the commodity price, and it's actually broken below the CCI, but also below the price moving averages. So bearish momentum at the moment on the daily. And if you're trading on the intraday, the 1 hour chart in this example, taking short trades only, and you would have been doing quite nicely and still in a trade today if you're on the 1 hour time frame with that CCI dropping. There's no divergence at the moment to identify, so bearish momentum and wait for it to break into that moving average band on the CCI on a daily to close out your trades. So again, that's the wrap for natural gas so far. And to get an understanding of the charting and the analysis, if you're not sure exactly what I was doing, hopefully the Beats Investing +1 series will help you better understand the insides. I'm not going to go through the analysis on the fundamentals of each commodity, but I'll be going through the analysis and how to read the charts properly, and a lot slower and a lot more deep dive in terms of setting up for newbies. Anyway, thanks for watching, and see you in the next update.